The Federal Reserve, a private cartel, masquerading as a public institution. The Federal Reserve, often referred to as the Fed, is commonly believed to be a branch of the U.S. government, working in the public interest to manage the economy. In reality, the Fed is a hybrid institution, a carefully constructed illusion that serves private banking elites while being shielded by the veneer of federal authority. Controlled by a web of powerful financial families like the Rockefellers, Rothschilds, and J.P. Morgan's successors, the Fed operates as a private cartel with the legal power to print money, charge interest on it, and remain untouchable by democratic oversight. The birth of the Fed, conceived in secrecy. The story of the Federal Reserve begins not in Congress, but in secrecy. In 1910, a group of bankers and politicians gathered at Jekyll Island, Georgia, under total secrecy to draft the plan for what would become the Federal Reserve System. This secret meeting included Senator Nelson Aldrich, whose daughter would later marry John D. Rockefeller, Jr., and representatives from major banking firms, J.P. Morgan, Kuhn, Loeb, and Coors, linked to the Rothschilds, and National City Bank. The goal was simple: to centralize control over U.S. currency and credit in private hands under the pretext of stabilizing the economy. 3 years later, in 1913, the Federal Reserve Act was quietly passed just before the Christmas holiday, while many members of Congress were absent. President Woodrow Wilson signed it into law, a move he would later regret, saying, "I have unwittingly ruined my country. A great industrial nation is controlled by its system of credit. Our system of credit is concentrated. The growth of the nation and all our activities are in the hands of a few men." Private ownership and structure. Despite the word federal, in its name, the Fed is not fully public. It consists of 12 regional Federal Reserve banks, all of which are privately owned by commercial member banks in their districts. These private banks hold shares in the Fed and receive annual dividends, guaranteed by law. The president appoints the 7-member board of governors, but the real decision-making power lies in the hands of private sector bankers through the Federal Open Market Committee, FOMC, which determines interest rates and monetary policy. There is no meaningful public ownership or citizen oversight. The Fed is not subject to regular audits, nor does Congress control its decisions. In essence, it is a legalized cartel of private banking interests operating behind a federal mask. The families behind the curtain, the fingerprints of elite families, are all over the creation and operation of the Fed. J.P. Morgan, the powerful banker whose influence over U.S. finance was so dominant that even Congress feared his power. His firm helped orchestrate the 1907 panic that was used as justification for the Fed's creation. The Rockefellers, through their vast banking interests, including Chase National Bank, now J.P. Morgan Chase, played a key role in shaping U.S. monetary policy and influencing the political process. The Rothschilds, while based in Europe, their financial network extended to New York through Kuhn, Loeb, and Cober and other affiliates. Their model of controlling nations through central banking was transplanted into the American system. These families weren't just rich, they were embedded into the machinery of finance and government. Through interlocking directorates, foundation, money, and influence over media and education, they've ensured that criticism of the Fed remains marginalized. Money from thin air, the business of debt. The Federal Reserve does not print money in the traditional sense. It creates it digitally, backed by nothing but trust. When the government needs funding, the Fed buys treasury bonds and deposits money into the banking system. This money is created out of thin air, and it enters circulation as debt. The government, and ultimately taxpayers, must repay this debt with interest. This is the ultimate scam. Private institutions charge interest on money they never actually earned. The public carries the burden of this artificial debt through taxes, inflation, and the erosion of purchasing power. Above the law, beyond the people. The Fed operates with a level of autonomy that no other institution in a democratic society enjoys. It sets interest rates, manipulates markets, and expands or contracts the money supply, all without voter input. Even its limited audits by the Government Accountability Office, GAO, avoid key areas, such as monetary policy decisions or transactions with foreign central banks. In 2009, after the financial crash, a limited audit revealed that the Fed had secretly loaned over $16 trillion to U.S. and foreign banks, without congressional approval. No one was punished, no reforms followed, the elites protected their own. Conclusion: a silent coup in the name of stability. The Federal Reserve was sold to the public as a solution to financial instability. In reality, it is the institutionalization of private control over the nation's currency and credit. It is not a servant of democracy, but a mechanism through which a global elite, anchored by families like the Rockefellers, Rothschilds, and Morgans, exert silent, unelected power. To restore financial justice and true sovereignty, the veil must be lifted. The Federal Reserve must be exposed not as a savior of the economy, but as a sophisticated engine of wealth extraction and control. An empire of paper built on illusion, running on obedience.